This is Edna Keat from Regina, Saskatchewan, and a question I got asked recently is, can you really earn 10-12% providing a private mortgage? So it seems like everyone has a brother, cousin, sister, uncle who says 8, 10, even 12% interest can be made on your money by lending it out on mortgages. Or maybe you heard about syndicated mortgage deals returning very high returns. Are these returns a myth or a reality? Well, just like your friends coming back from a weekend in Vegas, you only hear about the winners. Private lending, risk versus reward. Private lending is a great investment when done correctly. You can earn double-digit returns, and when invested from your registered account, either on a tax-deferred or tax-free basis. Best of all, with private lending, you can control who or what you lend on. So it is possible to earn 12%, but it's all about your risk tolerance. I have investors lending out their money at 4% on first mortgages with a low loan to value. Think about that. What can you get for a GIC? I think the rate right now, 1.1%. And then I have others taking a third position and earning over 12%. The free market determines your returns. The private lending world is a great example of a free capital market. The more capital available, the lower the return. The less capital, the higher the return. Simple economics. What does that mean? Well, basically it means the more specialized in lending you can become, the less competing lenders you have, and therefore the higher returns. How do you start? Well, to begin private mortgage lending, you need to decide if you're lending registered funds, example RRSPs, RRIFs, locked-in retirement accounts, tax-free savings accounts, etc. You can also use non-registered funds or both. Each has its pros and cons, and each province has different rules, laws, and regulations, and it's important to completely understand these prior to lending. A great way to start is to find an experienced mortgage broker and lawyer. It's important you do not lend your money via a mortgage broker or lawyer that doesn't themselves lend their own funds. They need to understand this whole concept and the procedures. The next question to ask when they bring you a deal is, why aren't you lending on this one? Sometimes it's just because the broker has all their funds tied up in other deals and they don't have any available. Ask them what they think the risks and rewards are, or the risks are compared to the rewards in this particular deal. They'll tell you. Select your property types that you're willing to lend on. So you have a mortgage broker, a lawyer, and cash in the bank. Now what? Well, the next step is to select the type of property you'll lend on. So ask yourself the following questions. Do you have a property preference? Example, single-family homes in urban or suburban areas. Are there any property types you will not lend on? Example, commercial, ones with environmental issues, mobile homes, rural homes, homes in small towns. Don't be afraid to fall back on your core knowledge to help you in the real estate world. A lot of the same things that you're thinking about when you're buying real estate are the same things you want to think about when you're loaning on real estate. Determine your tolerance for risk. It's important you ask yourself the following questions and then answer them truthfully. Many people think they're high risk takers when in fact they're not. What's your risk tolerance? Will you lend money on a first mortgage, a second mortgage, or a third? Can you afford to lose this money? What happens if you lose it? What's the maximum first mortgage after which you'll lend money on a second mortgage? Can you establish a reserve fund? Many times what happens is if the mortgage holder defaults on the first loan, the second mortgage holder will cover off the loan payments to protect themselves while they try to sell the properties. So you also want to determine your property value. So property value is the key security for mortgage investments. So it's imperative that you learn how to read and understand appraisals. Most sophisticated investors not only hire an appraisal to determine the property value, they also get a second opinion from a local realtor on every single deal. Remember, if the borrower defaults, selling the property is your only real recourse to collect your money. So it pays to do extra research upfront and reduce the chance of that happening. And again, patience is the key. Private lending is a great alternative investment to the traditional stock market. It's one of the few investments that you can do via registered funds that gives you direct control over your risk and return. Many new investors often ask me, if you had one piece of advice on private lending, what would it be? My response is always, take your time and don't rush. Wait for the right deal and it'll come. Private lending, when done correctly, is one of the best investments available, in my opinion. So if you liked my tip today, please head over to my website at multipleways2wealth.com. Sign up to get more tips, and I'll keep you posted on some new stuff.